Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. Check us out on Twitter at Tusk Media LLC. We are also on Facebook, facebook.com/Tusk Media LLC. Go there, check this out because we do a live show now every day at around 4:30, sometimes 4:45. As we said yesterday on the show, if you don't see us by 5, we're not going to make it.
Right.
But we try to get going then. You can also, as always, check out all our stuff on YouTube. So that's actually there. That show's called Outsider Trading. It's myself, Ben Nye, Sam Frost, Matthew Krebsbach. We sit around, we talk about the big stories. This is kind of one of our more, I guess, traditional formats where we just talk about one company for a little bit. So we're going to jump right in. Andrew Hall here, Ben Nye. Ben, how are you, man?
I'm doing well.
Very good, very good. So glad to be back. We hadn't done this in a while. We're in a new location. We have the mood tanks behind us. There are actually fish in this, but they are red today, because we're talking about Under Armour and lots of bad news, lots of negativity. Running through a couple of the headlines just for some context. Under Armour down about 75% over the last 12 months, down more than 30% in the last 30 days. So not doing real well if you looked at earnings, not very solid, tons of downgrades. Most recently we had their bond issue. They only have one issue of bonds that's outstanding, was downgraded to junk by S&P. What stands out as the worst news you see with Under Armour? Is there anything in particular?
Well, the biggest problem for Under Armour is that they're a growth company that's not growing as fast as they should be. We talked a lot about, we've talked about Under Armour in the past. We've talked about Under Armour vis-a-vis Nike and Adidas, and Adidas and Under Armour coming to take Nike's share, but it's really been Adidas that's been coming after Nike, and then also just overall the slowing picture, and Nike's going through some transitions of its own. Under Armour has got a lot of headlines because its CEO is incredibly promotional, Kevin Plank, and they have been extremely aggressive in basically giving away their product in order to just get that mass brand awareness. But in doing so, they haven't been profitable, which has been okay because they've been growing the top line, which is what the street likes to see. But now that the top line is decelerating, it's not growing as fast as it should be, now all of a sudden people are saying, wait, this isn't going to fill the gap to our valuation target. We're starting to miss on, if you do a DCF model, you're starting to miss on some of those intermediate targets. And how does that change the overall story? When the story changes, the stock price can change dramatically.
And that's one of the challenges for any growth company, not just Under Armour, not just retailers, not just brand companies, because this is very much an investment in a brand. That's one of the big challenges for a company like Under Armour, is just kind of continuing to meet that expectation, to continue to grow, because when you don't, you really see kind of that cliff, and that cliff can fall off really, really quickly. As an example of that, you mentioned kind of the analyst community, what they expect, what they're looking for growth-wise on that top line. When they don't see it, things go down. UBS downgraded the price target for Under Armour last week from $31 a share to $22. Pretty big change. Stifel from 28 to 19. SunTrust Robinson from $40 target to 25. Big move. Piper Jaffray from 41 to 17. Even a bigger move. So you're seeing a lot of those moves, and you're really seeing to start to compile, and kind of what you touched on just a little bit ago is just kind of this strategy. And it seems like Under Armour, for better or worse, is hitching their wagon, and right now I would say it's for worse. I think most people would agree. Hitching their wagon to a very promotional CEO, Kevin Plank, who kind of wants to be this visionary, wants to be the face of a huge brand, and kind of the acquisition of celebrities, for lack of a better way to put it, basically bringing in these endorsements. And that's what's really interesting, and what's making headlines this week is one of their, I would say actually not one of, definitely their biggest superstar that they have under contract for endorsements, Steph Curry, paying him $4 million a year, which is really a steal. If you look at it, Morgan Stanley estimated that he was worth $14.1 billion to Under Armour last
Especially
year.
Internationally.
Yeah,
he's huge.
he's huge. One of the best players in the NBA, debatably the best player in the NBA, the face of Under Armour, even more so than their CEO. He's gotten his feathers a little bit ruffled by some of the comments that Plank made. Kevin Plank, in case you missed it, told CNBC, speaking about our president, Donald Trump, he said he was good for American business. He said to have such a pro-business president is something that is a real asset for the country. He added, we engage in policy, not politics, but at the same time, this kind of seems like a guy sticking his neck out to talk, to talk about politics.
Right.
Especially anytime, we mentioned this in our podcast yesterday, the Outsider Trading video, the one that we do in the afternoon. We mentioned kind of the dangers that get created for some companies when they get political. We were speaking more about the hashtag boycott Trump and people who maybe it's not in their best interest to tick off a huge portion of the American electorate. The same goes both ways. He's kind of jumping out saying, hey, my boy Trump, he's getting things done. This is great for business. Good move, bad move, thoughts on his comments just in a bubble.
I mean, I think he should stay out of it. I think that his and when you're dealing with celebrity endorsers too, you don't want to. I mean, not only do you run the risk of alienating your customer base and supplier base, but you also run the risk of alienating your endorsement base.
Right.
And so, I mean, that's just a misstep on three categories, I think, from Plank. And when you're operating the business well, you can be forgiven for some not well thought out comments. But when your business is collapsing relative to what it should be, I mean, you look at the Google Trends data, and then it's up 2 points year over year. So it hit 100 this last month in December of the Christmas season, and then it was 98 the year before. That should be growing much faster than that. So when your business is misstepping, you cannot afford to make these these pronouncements and run the risk of more collapse in your growth profile.
Yeah, you really can't have loose lips about anything. Yeah. And what's interesting, especially, is if I'm Plank, I am running everything I want to say publicly to anyone other than shareholders. I'm running it by Steph Curry.
Right.
Because you look at, again, Steph Curry, yeah, he's under contract, but he makes $4 million a year. He could command 10 times that in the open market. Yeah, he's under contract until 2024. Worst case, maybe he has to buy out his own contract, go over to Nike and make 40 or 50 million a year off an endorsement there. I mean, he could move at any time. He kind of responded to Plank's comments, and it was interesting that he had to. The Golden State Warriors and head coach Steve Kerr have actually been very vocal opponents to Trump, as a lot of people in the limelight have been. But Curry said that he agrees with that description of Trump. Again, Plank called him a real asset. He said, I agree with that description if you remove the ET from asset. So we'll let you guys graph that out. Maybe we can get former intern Garrett to spell that word out for you on the screen, but we probably can't say it here because this is a family-friendly podcast.
Yeah.
But he says Trump's an asset without the ET. He added some follow-up comments. He said, I spent all day yesterday on the phone with countless people at Under Armour, countless people in Kevin Plank's camp, my team, trying to understand what was going on and where everybody stood on the issue. Again, if this is the face of your company and your biggest endorser and you are driven by endorsements, it's not a good thing for him to be coming out saying, trying to figure out where they stand.
Yeah, and Kevin Plank, for all his qualities about building this business into a multi-billion-dollar business in such a short period of time, I mean, how many brands have actually grown that way? I think he needs to take a step back and say, well, how has this business actually been built? Because it's not been him being over. I mean, he's incredibly promotional, but that's not why the business has grown. The business has grown because of the endorsements, and they've made some shrewd endorsement deals, and to now jeopardize that by alienating your biggest client is an unwise move.
It's ill-advised, certainly ill-advised. And what was interesting too, Curry did kind of reach some kind of conclusion, some piece if you're an investor in Under Armour out there, and he said, we basically got back to this point of me recognizing the brand that I've put my name on. But even the way he said that, he said, quote, as of Wednesday afternoon, this is something that I'm standing on. Again, not necessarily a ringing long-term endorsement from Curry. And he says, if there's a situation where I can look at myself in the mirror and say they don't have my best intentions, they don't have the right attitude about taking care of people, he said, if I can say the leadership is not in line with my core values, then there is no amount of money, there is no platform I wouldn't jump off of if it wasn't in line with who I am. So big threat to Under Armour. Shares are actually up a little bit today pre-market. We're recording this on Thursday, February 9th. So up a little bit in pre-market, certainly probably not because of Curry's comments, but definitely something to keep an eye on, again, to just kind of see how Plank reacts, because again, this is a growth story. Growth is slowing. Things are getting hairy, and it's kind of going to be interesting to see whether he starts throwing more Hail Marys, stick his neck out more, or what happens.
And a couple for me, because I thought Nike was, doing an ill-advised move to take its position on the current administration. I mean, it turns out, if this continues, if Curry continues this disagreement with the management of Under Armour, Nike could end up getting Curry for a steal,
right?
Just because Curry doesn't want. I mean, is Curry going to go to Brooks? I mean,
yeah, right.
It'll be Nike or maybe Adidas, but Nike's in a prime position, especially being so closely located.
Right, absolutely. So something to keep an eye on. Again, red tanks. That's all you needed to know about Under Armour. There's blood in the water. Maybe Nike's sniffing around for an opportunity to get Curry. We'll see how that plays out. We'll keep an eye on it. Hit subscribe if you're on iTunes. If you're on YouTube, hit subscribe as well. We will be back later, live every day at 4:30 on Facebook.com/TuskMedia LLC and Twitter.com/TuskMedia LLC. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.